Welcome to today's market report.
Global shares bounced in volatile trading Friday with debate over the timing of future interest rate rises on both sides of the Atlantic, intensified by Eurozone inflation jumping to a 13-year high. Earlier in the week, global shares suffered their worst bout since January, with major US and European indices feeling the heat. The S&P 500 suffered its worst month since the onset of the pandemic in September, reflecting concerns about COVID-19, inflation fears, and budget wrangling in Washington. The first day of October, the month for some of history's infamous market routes, marked a seesaw session with major indices repeatedly switching direction amid investor uncertainty. MSCI's gauge of stocks across the globe gained 0.47%. The index had been on track for its longest daily losing streak since last February. Wall Street gained ground with sentiment boosted by drug maker Merck announcing progress in the development of an oral COVID-19 drug. The Dow Jones Industrial Average rose 1.49% to 34,300. S&P gained 1.18% to 4,300. The Nasdaq added 0.76% to 14,500. It was a different picture with the Stoxx 600 index falling 0.4%. There is clearly still plenty of nerves in the markets at the moment, which is perfectly understandable under the circumstances, according to Oanda. There is an enormous amount of uncertainty as we move into the end of the year, and the central banks removing stimulus, even raising rates in the midst of that, doesn't inspire confidence. With stellar economic growth figures now in the rear-view mirror, markets are looking ugly going into October, according to CMC Markets. There is a sense that with October's reputation, worries about surging energy prices, supply chain disruptions, concerns about inflation and power shortages, October could be a fairly windy affair. Consumer price inflation in the 19 countries sharing the euro accelerated to 3.4% year-on-year in September from 3% a month earlier, the highest reading since the height of the global financial crisis in September 2008. A sharp rise in the cost of living poses a threat to consumers and savers, so that is influencing the mood in the markets, according to Equity Capital. So far, central bankers have insisted that rises in inflation are temporary. We think there are high chances that this inflation is less transitory than all central banks, including the European Central Bank, according to BNP Paribas. Data oversight showed that Asia's manufacturing activity broadly stagnated in September as signs of slowing Chinese growth weighed on the region's economies, weighing on Asian shares. The dollar slipped, having begun the last quarter of 2021 near its highest level of the year and heading for its best week since June, as currency markets braced for US interest rates to rise before those of major peers. The dollar index fell 0.32%, trading at 94.09. Gold inched higher following Thursday's 1.8% surge as the weaker dollar and worries about rising inflation countered bets for looming interest rate hikes, keeping bullion on course for a small weekly gain. US gold futures settled up 0.1% at $7,758.4 per ounce. Benchmark 10-year notes last rose to yield 1.4702% from the 1.527% level late on Thursday. US crude oil futures settled at $75.88 per barrel. Brent settled at $79.28 per barrel. The sterling pound keeps the recovery well and sound and now lifts cable to new multi-day highs near 135.70 on Friday. Cable advances for the second session in a row on Friday and extends further north the recent breakout of the 135 barrier after bottoming out in fresh 2021 lows near 134 the figure on September 29th. The renewed and quite moderate selling pressure hitting the greenback forced the dollar index to quickly abandoning the area of recent year-to-date highs around 94.5. The euro-dollar is trimming losses, trading at 150.96, barely up 0.13%. The dollar's weakness exerted upward pressure on the euro-dollar pair. For next week, the Eurozone will be looking at the retail sales, whilst in the US, the ISM, PMI and non-farm payrolls are due to be released.
This is today's market news. Thanks for listening. We'll see you next time.